Hi, Tom and Jane. My name is Bryce, and I'm a friend of Jenny's. Jenny has connected with me with you guys, and I'm glad to have the chance to be able to speak with you about something so important. Something not just about now, about us meeting, but rather something that extends far into the future, not only for your benefit, but for the benefit of your family. Financial investment. It's such an important thing, and it's very often overwhelming. It's normal. Don't feel out of control. Don't feel that you can't decide what's ahead. Rather, I'm meeting with you so you can decide what's ahead. Tom and Jane, I'm a little familiar with your situation. What I'm aware is that you guys have 5 kids, ages 2 through 20, a wide range. I'm aware of what your working situation is. Tom, I know that you are an assistant manager at a grocery store. Jane, I know that you work part time at a local dentist. Um, I know that you guys have 25,000 saved up for retirement, a decent nest egg. However, we want to grow on it. Um, and I know most importantly that you guys are eager and desire financial security. I want to help you achieve that financial security. However, in order to find that, you need to be aware of what's going on. You need to be updated and you need to have the necessary information in order to make good decisions. Tom and Jane, that's why I'm here. The most important thing we recognize is what I'm about to share with you is not just financial information. This is not just a financial investment. Rather, this is an emotional investment. To give you a little bit of security, let me tell you a story. This story is about a family, um, a young mom and dad, Grill and Karen. They were busy, busy people. 6 kids, kind of like you guys, very close. Grill and Karen passed the scraping by stage when they were getting kids off. Kids are growing. They're paying on their house. They're trying to figure out how to be financially secure. And so they reach that point where we're no longer scraping by. Let's get serious about this. In some years' time, we're going to be retired and we need a nest egg. We need something to lean on. So they analyzed, they got informed, and they looked at what their options were. After looking at what their options were, they decided a couple investment ideas that were safest for them. After investing in those, they were able to retire a number of years later and find security. Once again, security isn't just about financial well being, it also extends into emotional well being, which leads to a happy family. It's part of the equation. Tom and Jane, this is what I want for you guys. This story holds importance to me and makes me want to help you because this is the story of my family, my parents, as our family was growing. Let's get jumping into this, Tom and Jane. There's things we can do. The ball will be in your court after this presentation. So let's get started. We're going to be looking primarily at mutual funds and ETFs. They're two different kinds of investments we can make. However, it's important for you guys to know what you're looking into and what the difference between mutual funds and ETFs are. So we know that mutual funds are both actively and passively managed. The active mutual funds are managed by fund managers, therefore they typically cost a little bit more. They charge you a higher rate because they are actively managed. However, we also have these ETFs, which are primarily passive investments, and these are pegged to the performance of a particular index. What's the minimum investment? This is a big thing for you guys. You guys should be risk adverse. Risk adverse is important for you guys to be because we don't have all the time in the world. We have $25,000 saved up, yes, but we can't be risky throwing money out there. Rather, we need something reliable and stable that we know will guarantee us a set amount of returns. That will help you plan the most. So ETFs are purchased as whole shares, while mutual funds are typically in flat dollar amounts. Um, and then unlike ETFs, mutual funds can be purchased in fractional shares or fixed dollar amounts. What are the costs? Mutual funds, we have basic operating costs. However, with ETFs, there are a couple more implicit costs that you guys should be aware of. For example, premiums. This will complicate it a little bit whenever you're looking into what to buy. Therefore, I suggest looking mainly at mutual funds because of the simplicity of their costs. However, in order to know what you should invest in, one of the most important things is the current market. So, how's the market in general? Tom and Jane, I know that you guys are aware it's been a ride the past year and a half because of the COVID pandemic. However, rest assured, volatility is gradually decreasing. We're finding a normal return to what the market should be at. Here we're looking at a stock chart which displays the opening and closing prices of stocks. And we see that we had a spike here as the pandemic is ending. However, things are returning to normal. This decrease in return shows that we are decreasing in volatility and getting back to a normal spot, which will help us feel security in the returns that we want to get. So volatility is gradually decreasing. Rest assured, Tom and Jane, we will get back to normal. Now let's look at the NASDAQ returns and S&P 500 returns. We're looking here at the 3-year returns just so you guys, because I want you guys to get an idea of what the returns that you should expect are. Here we're looking at the 3-year return rate for the mutual funds and ETFs that we will analyze. We're going to be looking at the 10-year return rate because we want something long-term. You guys are saving for retirement, and we're not looking for an immediate splash of cash, but we do want something that will give us that money a little bit before we retire. So this is the norm. We're looking at a norm in the NASDAQ of 0.25. Again, here we're looking at a list of about 20 mutual funds and ETFs that give us decent returns. However, our returns are really only safe to lean on if we know the beta. The beta tells us how reliable or stable the returns of that fund are. So here we have a list of reliable betas that move with the market. They're not going to be volatile otherwise. Here we see that there are more options in regards to mutual funds rather than ETFs. So this is something we're going to keep in mind. So looking at mutual funds, there are different categories. Let's look at a category that simply its returns far surpass other funds, especially when we take into account beta or stability of the fund. The category we see here is a large growth mutual fund. This is simply a big business, a business that is reliable in what it makes and what it provides. This is the kind of mutual fund we're going to be looking at in a second as we pick a specific mutual fund that I think you guys should invest in because of its stability and guaranteed returns. Let's take a look at the same thing. We're going to look at large growth ETFs here because large growth ETFs, same as large growth mutual funds, they simply have the highest return for the stability offered. Again, you guys are risk adverse. We don't want anything risky. We want simplicity, something that will guarantee returns so we can have financial and emotional security. So we see large growth ETFs, large growth mutual funds as the most stable and guaranteed returns. However, breaking it down from category into the specific name of an ETF or mutual fund, we find here the top 2 ETFs and the top 2 mutual funds for returns over 10 years based on their stability. We find here Invesco, iShares are 2 ETFs that are reliable and they will give you returns. We find the same thing for Edgewood and Virtus. However, having mentioned earlier, the costs are slightly different for ETFs and mutual funds, so I'm going to, here at Final, recommend one of each. I'm going to recommend the Invesco QQ Trust 1 ETF. It gives you a decent return. It moves with the market. It's nothing volatile. You guys should be in control for the most part of what to expect will happen with this ETF. The mutual fund that I suggest you guys invest in is the Edgewood Growth Mutual Fund. Again, good return. It's stable. Both of these are easy to manage and they offer excellent returns. Tom and Jane, this should not be a complicated process, but rather a smooth one in which you guys are in control. That's why I suggest these 2 funds, an ETF and a mutual fund, because you guys should be in control of your future, financially and emotionally. I know that you guys are eager, and that's the most important part of this equation. Therefore, heads up, make a smart investment. Here are my recommendations. Ultimately, it's up to you guys, but I think you guys would be best making this safe move of the Edgewood and the Invesco investments. Tom and Jane, come to me anytime. You know I'm here. Otherwise, let's proceed with safety and security, and let's make a safe future for you and your family. Thanks.